Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, August 14th, 4:50 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a weak uptrend, short-term caution. Market improved somewhat today. We'll get into that when we dive into the charts. Check over here at the trend gauge. Market leadership. All 8 of the RG8 were in oversold territory, and the stochastics were neutral, and 11 stocks punted off of the 21 over 21 leaders list last week. That put us in a bearish downtrend. I rebuilt the leaders list over the weekend and actually had quite a few candidates that wanted to vie for those open spots. We'll go over the updated 21 over 21 list, and good enough action today and a stochastic cross up from oversold in several of the RG8 puts the yellow arrow there, moving market leadership more towards neutral than bearish. We'll see how the rest of the week goes, but some good signs today. Short term, we're neutral. Only the Dow trending above the 21-day moving average. S&P making a run at it today. NASDAQ 100 regained the 50-day, so that's no longer showing as neutral or bearish under the 50-day moving average. Bottom line is big cap tech, which had been beaten up lately, led by semiconductors, had a decent run today, and their big weighting in the indexes resulted in some good green numbers for those for the Dow and the S&P. Medium term, with the NASDAQ 100 back above the 50-day, at least for one day, the green arrow showing there. Long term, all 5 of the major indexes holding well above their 200-day moving average. So what happened today, as I mentioned, semiconductors, which had been really beaten up, only 2 in the entire liquid universe that we observe, only 2 closed above the 21-day moving average as of Friday's close. So just a little bit too oversold, maybe. Well, after today, 1-day bounce, we'll see where it goes. But that and 6 of the big 7 putting up nice gains today. Tesla being the only exception that led the S&P 500 to bounce further off the 50-day moving average, and for the NASDAQ 100 to reclaim its 50-day moving average. Here are the numbers on the day. Our 8 growth ETF composite, the RG8, up 0.4%. S&P high of the day, up 0.6%. NASDAQ 100 also near high of the day, up 1.1. Dow up 1/10. Mid caps up 0.16. Russell 2000 dragged down by oils and banks, down 0.24%. Global 60/40 just barely positive. Bonds were a drag on that today. In-house GROTECTION up 0.62%. We'll go through the updated 21 over 21 list and the tail of the tape, of course. But let's dive right into the S&P 500, and we're going to note, at least for a day, the hookup here from oversold conditions. Now, we saw this last week also, and we ended up going lower. Further into oversold conditions. It's actually better when you make it into oversold conditions and then see the hookup. It's no guarantee, of course. Just look back here in February, where we had a false start back above the 21 and had another dip down lower before the markets starting with the March 29th follow-through day off the bottom. And that March 29th follow-through day led to some very nice gains. This pullback, the most severe since that happened, but holding the 50-day moving average on the S&P. And as I said, putting some distance between it today, coming up into the declining 21. And that's the next level that we need to get above, as the S&P has failed there 1, 2, 3, 4, 5 days in a row, trying to get back above it, starting before last week and then all of last week, bouncing at the 50-day on Friday. And as I said, putting some distance between the 50-day and the close on the S&P 500 today. Let's go to the NASDAQ 100. You can also see the stochastic hookup and just about across with the moving average. That's an added benefit. We ran into the declining ADMA here, did close above the 50-day moving average, still below the 21. That's quite obviously a level we need to get back above. But the NASDAQ 100 showing some relative strength today after really being weak over the prior 2 weeks. Dow Jones Industrial Average, not the best day today, lack of relative strength, but that's a change over what we've seen the prior 4 weeks. But it has still held above the 21-day moving average, and last week it had its stochastic hookup, not quite from oversold, but the hookup nonetheless. Mid caps, MDY, pulling back near the pivot. Didn't quite got to the 10-week, not quite to the 50-day moving average, but again, similar to the big cap indexes, the S&P and the Nas, we've got the declining 21 overhead that we've got to get through. And small caps, tough day today. Anytime banks are lagging and small oils are down. But an undercut and reclaim of the 50-day moving average intraday here. No stochastic hookup here, however, yet. So those are the big 5 indexes. Let's go to the VIX. VIX was up most of the day today. Let's go to an intraday chart here. And then started the day up and then little by little sold off as the indexes gained strength, closing below the 21-day moving average. Good stuff there, and below the 15 level. So that's also a benefit to stocks. Let's flip to the dollar. UUP up 0.35% today, breaking out or challenging this 2872-ish recent high, up up as far as 2875. But you can see we topped in this area in March. We topped in this area in late May, and that led to a market rally when we topped. So a move above today's high, I'm going to flag that 2875 would not be a positive. A reversion of the mean back down, at least toward the 21 and the 50-day moving average, would be beneficial for stocks. Let's flip to bonds now. Well, no, let's go with the inter-asset correlation. With the dollar being up, gold was down, GLD down, GDX gold stocks down 1.73%, silver down 0.38%. Let's go to Bitcoin, BITO, down 1/3%. That's been trading in a tight range. Now to bonds. Broad bond index lower, not by much, but by 0.13%. Broad bond index down 0.21%, so a little bit worse. TLT, the long bond, down 0.2. TYX, the 30-year, up mildly, as you would expect, with the TLT being down mildly, and the TNX, the 10-year, up 0.38%. Not quite new closing highs, but it's bounced off the 21 and has had 3 days up. Stocks want to see this pullback also. Is that it? Yes, that's all the inter-asset correlation that we show. Let's get to the tail of the tape here. Stochastic index, as I said, small, medium still headed lower, but in oversold. The large going from neutral to up from oversold territory. Again, just one day. We need to see some follow through, as always. A little bit of news. New York Fed said consumer expectations for inflation rate going forward have declined. Well, you always want to see the consumer being confident no matter what the economic topic is. Tuesday morning, we'll have retail sales. Let's see if they're really confident. And then we're going to have some big retail reports later this week, Home Depot, Walmart. Day count from an 8-day downtrend to 1 day up. We're basically right on the ADMA on the S&P, 5th day below the 21 on the S&P. Intraday, 3-cup bases. Let's take a look at the S&P in-house. It was actually a giant inverse head and shoulders here. You can see the strong move up into this 45, 44, 85, 86 area. 1 cup, a 2nd cup, and then the 3rd cup finally broke out. This looks like a giant, as I said, inverse head and shoulders here. But closing near the high of the day is good stuff. We'll see if this confidence follows through into tomorrow's action. Sectors up on the day. ITB started weak, finished strong. In fact, we stopped out of our nail position for a small loss today on the early strength of interest rates, and they reversed a bit later in the day. ITB showed strength. Definitely semiconductors and software strong today on the weak side. Gold and silver stocks, oils, KRE, and um, three defensive indexes: XLP, XLU, XLRE, Pure. The SPLV, low volatility, was purely weak today, you could say, while SPHB outperformed. In-house, sold nail and TBT early, bought Amazon on strength, and UPRO. Good risk reward off the 50-day moving average when we saw some strength coming into the market. That persisted, and we ended up closing near the high of the day. That raised our beta from 0.86 to 1.15. So back on the positive side of the 1.0, which is where we want to be if we're above the 21-day moving average and the 50-day moving average. So at the minimum, the 50, back above the 50, we want to have at least 1.0 or in the vicinity of that if there's things to buy, and there were today. Also, quite a few stocks looking good, bouncing at their 50-day moving average. That's always good to see too. So the bottom line, semiconductors lead the NASDAQ 100 reclaim and the S&P 500 bounce off their 50-day moving average. We'll take a look at the finalized version of the 21 over 21. Let's get right into that now. First, I want to show a couple of charts that are at the 50-day or are looking to bounce at the 50-day, and this would certainly help with a confidence in the market too. Here's DraftKings, bounced last week off the 50-day moving average. That's the red line here. Uber today undercut and reclaim the 50-day moving average for a positive outside reversal. Also pretty good there. Airbnb battling at the 50-day moving average, hasn't quite reclaimed it yet. Royal Caribbean, a cruise leader, held the 50-day moving average, trying to reclaim the 21. AEHR, Semiconductor Test Systems, took it on the chin last week. Got punted off the 2121 list after a big negative reversal on Thursday, but bounced nicely at the 50-day moving average. LRCX, one of the stronger semiconductor equipment companies, with a great breakout on earnings that completely fizzled late last week, along with pretty much all the semiconductors, showing a nice bounce at the 50-day moving average. Mara, Bitcoin miner, bouncing at the 50-day. Adobe, didn't quite get to the 50-day and reclaim the 21 today. And Netflix, under the 50-day moving average, but making an effort to reclaim it. Let's see if it can overcome it tomorrow. So those 9 bouncing at the 50-day. Let's get to the full 21 over 21 list now. And we added, I think we ended up with 14 or 15 by the time we closed Friday's video. After discussing with the fellas over the weekend, this is the final list. AAOI, extreme strength, strong as could be last Thursday, ugly day Friday, back to being strong. You got to have a strong stomach if you own this. So size down, as it's got a massive ATR, but up 20% today. BWXT, this is uranium components, bouncing at the ADMA after an earnings gap up. Amazon, we bought this today, clearing 140, closed above 140 also. Nice bounce at the 8 EMA, favorable volume patterns and action since its earnings gap up. Lilly continues to power through, making a day 5 higher high after its earnings gap up. Novo, not quite as strong, pulling back after that big news last week that they got their Wegovy drug also showed reduction in cardiovascular events, but no follow-up strength to that one yet. AppLovin, we added this, earnings gap up, day 3 higher high. Celsius, I certainly should have included this on Friday when I talked about what I added. Powering through after its earnings move up. Clear market leader. Elf consolidating nicely after its earnings gap up. Axon, these are the ones I added last week, but we'll go through them very quickly. You can see this, a nice trending higher after its earnings gap up. DRV, this is inverse real estate. So an inverse ETF going sideways. We've got some small gains in this. Bros, inside day, consolidating very nicely. We're looking for this to blast higher through 34 to add to it. You can see 33.89 resistance over here, 33.30 here. That's around, it closed right at 33 on its earnings gap up, bounced at the 200, has been hanging around between 33 and 34 consolidating. We want to see some volume take it through 34. And NRGU, we took some profits in this when it was extended last week, hanging out below. We need a little bit more of a pullback here, but inside day on energy, certainly one of the strongest sectors. The rest, starting with BG, are leftovers from last week. And with that, we're going to wrap it. Remember, it's not how much you make in the markets, it's how much of that you can keep. Good risk reward area here to get long via UPRO today with the bounce off the 50-day moving average and strength coming into the NASDAQ. We'll see if we can get some follow through strength for the rest of the week. We hate giving our gains back. We've done a pretty good job protecting them, and now we got the bounce that we wanted at the 50-day. If that fails, we'll be getting a lot more defensive, but for now, adding some strength back to the portfolio today. And with that, I'm going to wrap up the video for Monday, August 14th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.